everybody's against Bitcoin before they're for it, right? We're all against it until we're for it. I was. Bitcoin's digital energy. Satoshi figured out a way to both transfer and store, to basically store and channel energy through cyberspace without an intermediary. That's a profound breakthrough, because that means I can put $1 billion in cyberspace. I can move it 60 times a second. I can hold it for 1 million years. And I'm not facing counterparty risk to a bank, a country, a currency, a corporation, right? A culture. Real estate investors, they want to buy something that looks like real estate, right? And bond investors want to buy something that looks like a bond. And preferred stock wants to buy something that looks like preferred stock. And some people want half the upside as a capital gain, but they don't want the downside. So they got to buy something like a convert. And options traders, they want to trade options. So when Bitcoin first came out, there were none of these things. And then for a while, there was an entire crypto economy that was created offshore, too much colorful drama and anxiety, like the FTXs of the world, et cetera. Well, those are unregulated crypto exchanges, and conventional, traditional, regulated investors can't trade in that. And it's probably good they didn't, right? Because most of them failed. So what we're watching right now, since 2020, is the creation of the institutional vehicles in order to invest in Bitcoin. And, I've got this saying, I say, everybody's against Bitcoin before they're for it, right? We're all against it until we're for it. I was. Why are you against it? It's like, well, why are you against electricity in 1880? I'm sure the first guy with fire, he scared a bunch of other tribesmen, and they're like, what happens if you get too close to fire? It burns you. No one wants to get burned, right? The idiom is, no one wants to get burned. And yet without fire, we're not better than the apes. And then what happens when we play with electricity? We get shocked. Who wants to get shocked? It's another idiom in the English language. Shock is bad, and yet without electricity, like 90% of humanity is dead. New technologies are scary, right? People thought that if you got in an automobile and went more than 10 miles an hour, it would suck the oxygen out of the cabin and you would suffocate. So if you look at the great revolutions in energy, right? Fire was extracting energy from matter. Water was extracting energy from gravity, right? That's the big idea. There's gravity, there's energy in this field. If I put water there in a water clock and it comes down here, I can turn a wheel with it, right? Big idea. And then wind, extracting energy from the atmosphere. And then the steam engine is, let's refine the entire idea and move create an engine that takes that energy and spins something so that kids don't have to do it, right? The steam engine eliminates slavery. It's a pretty good idea, right? And then after that, gasoline and internal combustion engines, and then, what follows next, nuclear reactors and electricity. And each of these energy revolutions, it was a shocking, scary paradigm shift, and for 30 years, people rejected it, and they had good reason, because their city burned down, and their house burned down, and they got electrocuted, and my airplane fell out of the sky. Right? It's like and if you study James Watt, he spent his entire life trying to make the steam engine work. Not easy, right? It's not easy. Bitcoin's digital energy. Satoshi figured out a way to both transfer and store, to basically store and channel energy through cyberspace without an intermediary. That's a profound breakthrough, because that means I can put $1 billion in cyberspace. I can move it 60 times a second. I can hold it for 1 million years. And I'm not facing counterparty risk to a bank, a country, a currency, a corporation, right? A culture, a commodity manufacturer. And so that's a profound idea. We're 15 years into the innovation. We're only 4 years into the crazy years. And really, January 2024, was really the beginning of this era. Maybe this is year 0 of institutional adoption. When we have regulatory acceptance, bank acceptance, and accounting acceptance of Bitcoin, those 3 planks, that's year 1 of adoption. And when do you have that? Well, you kind of got 75% regulatory acceptance since we got these ETFs. Not all, most. When we have IBIT trading on the options market, that's a big step forward. And when you can do in-kind create and redemptions of the ETFs, you've got full regulatory acceptance of the asset. Then January 2025, fair value accounting becomes the norm. And now you've got accounting acceptance. And now you can mark up and mark down the asset just like Apple stock or just like other assets. And then when you have too big to fail banks, when you have the BNY Mellons of the world or the JP Morgans of the world or the State Streets of the world, they custody the Bitcoin or they buy and they sell and they hold the Bitcoin. You'll have banking acceptance. And what are banks? Banks are just institutions that are engineered to be custodians of financial assets. So of course, the greatest custodians of assets in the world need to custody this asset. So we're right in the middle of that, and I think maybe 2025 you can call year 1 of the institutional era of digital capital, that thing which is Bitcoin.
You mentioned yield. And Michael, every single time I do an episode on Bitcoin, there's always somebody in the audience who says, yeah, but if I buy it, then I earn no yield on it. It's not a stock. I don't get paid a dividend quarterly. It's not a second property that I can rent out. It's not money in the bank that I can earn a savings yield on. So when, or if, but I think from what you're saying there, when banks, whether at JP Morgan, Citi, start adopting it and allowing us to put our Bitcoin in the bank, I've heard you speak about this, what happens there and how are banks key to unlocking that next phase?
Yeah, let's say I give you 10 acres in Manhattan. There's the land. You buy the land. You can buy the land in 1700, 1800, 1900, the year 2000. Is it worth something? You know, would you sell it to me for a penny if you owned it? No, it's worth something, right? But there's no yield. It's raw land. There's no yield. Well, give it to me for a penny. There's no... What? No, it's Central Park, but there's no yield, right? Okay, so what's the solution to the problem? Well, you take the land and you have a company, a real estate developer, and the company builds a building on the land or parking lot, right? And then they rent it out and they generate the yield. And okay, so do I like that or not? Well, there's counterparty risk. I'm buying a security, I'm buying a REIT, there's a company, the company might build a building that falls down, they might get a deadbeat, you know. So the point is there's risk. So you want a reliable company that you trust, too big to fail, to take that risk and give you the yield.
A bank.
Well, no, MicroStrategy is doing it right now, right? Like we just discussed BTC yield. So MicroStrategy takes the Bitcoin and then we do something. We actually find a way to take out a loan, reinvest it, and generate a BTC yield. And the price you pay is you take a risk with a security called MSTR, right? So banks do it a different way. I mean, bank will take your asset, you have $1 billion of something, $1 billion of Apple stock, and they may loan it out to someone else and they may get paid a fee by the one person that wants to borrow it, and they might pass it on to you and they might not, right? So sometimes they do. They'll definitely do it with your treasuries or with your cash. Sometimes they don't. Depends on who you are. I think that banking is just the next logical step. But in terms of how am I going to get a yield on Bitcoin, I'm going to get a yield when 1,000 companies in the Russell 2000 buy Bitcoin, operate their existing business, sweep their cash flows into Bitcoin, and do stuff with it. They develop business on top of it, right? That's a way to get a yield. And I'll get a yield if too big to fail banks that are well capitalized, they start to accept Bitcoin as collateral. And probably You don't get a huge yield, by the way. If you think about the metaphor, it's like when you own Apple stock, it's, oftentimes you don't get a yield by loaning your Apple stock. But big corporations do. The big investors actually get paid a small interest rate when they loan their stock to people that want to short sell the stock. And so there is a market there for that. But more likely the next stage is a big bank accepts your Bitcoin collateral alongside your Apple and your Microsoft stock and your Treasury bills as collateral. And they give you some advance ratio against it, and then you can borrow at SOFR plus some spread against it because it's, no worse collateral than Apple stock as a block is. And so you'll start to see the formation of credit markets around Bitcoin.
But just on this corporatization and even perhaps government adoption, what do you think is the fear other than just volatility? I mean, is it fear of completely disrupting economic theory and monetary policy as we know it? Is that the fear that these corporates and that governments hold?
If you want to see the people with all the money and the power in the world embrace the asset, they will do it when their vendors support the asset. And that's a rippling thing, right? Because until you have the fair accounting, people can't see how intelligent the idea is. The difference between fair accounting and indefinite intangible accounting for a big company is under fair accounting, you would know within 5 seconds whether you had a good quarter. Oh, we made like $10 a share. Under indefinite intangible accounting, you would have to read 250 pages of documents and create your own proprietary models and spend somewhere between 1 and 10 hours to figure out how you feel about the quarter. The 70-year-old billionaire isn't going to take 10 hours. They can't even read the document, right? And so you could get all intellectual about this and say, oh, they've thought about it and they don't like this and this and this. That's not the case. It's if I call my broker and say, buy $10 million of this, and they say, you sure, boss, click, and it's done, then you start to see adoption. And when the company that adopted it announces they just made twice as much in their earnings for the quarter as they used to because of it, it's like, well, then buy more of that stock. And when the mayor of Miami or the mayor of New York City or the governor of Texas says to his treasurer, I think we ought to have some Bitcoin, the treasurer says, okay, no problem, I'll let Citigroup or Bank of America or Morgan Stanley know, and they'll do it, click, and it's done. Then you're adopting. But when the governor says to the treasurer, buy 10 billion, and the treasurer says, there's not a single bank in the US that will sell that to us, it's like, well, I guess we're too early. And it's the same thing with you putting an elevator into your house, or electricity, or how about running water? Why didn't people put running water in their house, in 1880? It's because it was like, you had to be rich, and it was expensive, and 1 in 100 people had it, and the guy that's building your house didn't know how to do it. He'd never done it before, and so these things get embraced as everybody in the society gets comfortable with the new technology, and generally it's like a 30-year generational shift, In year one, no one's doing it. You see those pictures of New York City in 1905, no cars. 1915, everybody's got a car. It's like, well, what did it take? It took this exponential set of processes and support for this to happen, and the same is going on with Bitcoin right now.